Awesome, awesome. All right. Had some technical difficulties. I'm still learning how to use the YouTube platform for all this live stuff and everything. So yeah, put the glasses on. I'm sorry, I got some eye thing right now, and it is not good. All right, so let's get into a little bit here. Um, review. Hmm, I'll do that later. But yeah, so let's hop on over to our trading platform. I want to show you guys kind of what happened throughout the day, basically, while I wasn't on the charts, and obviously while I wasn't streaming. The cool thing about trading is that you can really do it at any time in the day. It really just depends on your schedule, what your strategy is, and kind of how you want to trade. Like you don't need to be sitting here for hours and hours a day. Obviously, the more that you're sitting on the computer or the more that you're reading the charts and looking at the charts, it's great for experience, but sometimes that can lead to over trading. So yes, you're watching moves, and yes, you're watching money be transferred in and out of other people's accounts. But if you're over trading or you're taking trades just because you have the fear of missing out on certain moves or the fear of missing out on money, then you're subject to losing some of that money yourself. The markets are volatile. They're gonna go ahead and move in whatever direction they seem fit, and the market isn't wrong. You're sadly, you as the trader, you're the one that makes the mistakes. You're the one that's wrong. You're the one that read it wrong. The market goes in whatever direction it wants to go, and we have no control over that. So I feel like that's something that's important to say. I mean, obviously, it's great, to hop on and read and kind of get some time on the charts, but you want to make sure that you're doing it to a healthy amount. Because if you're sitting here too long and you're looking at these lines, and I've done it before too. I'm not saying obviously everyone goes through their ups and downs, and you got to go and experience it yourself to understand. But I've done it as well. I've sat here for hours upon a day, 2, 3 hours, 4 hours, 5 hours a day, sometimes back to back to back, and you're gonna be subject to over trading. Your emotions are gonna get the best of you at points because you're here for so long, and there's not a lot of what's the word, like there's a lot going on the chart, but there's not really a lot of what sort I want to use. I want to use like there's not a lot of activity, like besides what's going on the computer. You know, um, if you go ahead and you look, let me just share my screen. Might as well, so that we're kind of on the same page. Because here's, but like when you're going ahead and you're looking at, does that make a difference? Oh, it does. When you're going ahead and you're looking at this, right? And even if I come over here to price action right now live, this, it's moving, and especially during specific times, you're going to see it move. It's going to be extremely volatile. It's going to bounce up and down and up, or like even this morning when we were watching it in the other stream from this morning, right over here, these are all 1 minute candles. So yeah, these 1 minute candles get pretty exciting, but there's not really a lot of effect on you in the physical world, right? Like all you're doing is watching these lines move, and then these lines translate to price action and trades from a bunch of other traders around the world, from a bunch of institutions, whoever's in the market at that period of time. But like physically, not within your body, because obviously, depending on what level trader you are, you're going to have to go ahead and you're going to have to go through kind of the ups and downs and the experience and gain the experience in controlling your mentality and obviously your physical responses. But I mean, like, everything beyond yourself and the computer, there's nothing going on like out here. I mean, obviously there is, maybe my family's doing something over there, or the neighbors making noise over here, but there's not anything that's like, you're not getting a response in the physical realm from your trading, if that makes any sense. It's not as energized as some people make it seem to be. Like, I like to compare it kind of to like a video game, right? There's a lot of minor similarities. It's not crazy. Obviously there are huge differences, but I mean, they're both in the digital realm, and you're going to be on the computer, you're going to be on a console or whatever, right? But with a video game, when you're playing, there's so much going on visually in a video game, and you can kind of hear the noises, you can hear gunfire, you can hear the revving of the engine, depending on what, or you can hear a dragon, depending on what games you're playing. You're getting all of these responses. Whereas here with trading, the only response or effect that you're getting from what's going on is price action. Even these indicators, I didn't explain this in the last one, but this red, yellow, and blue line, these are called EMAs. So they're exponential moving averages. But these indicators, right? So these ones are, even if I popped on, I'm not going to do, let's see, like over here, this purple one is a EMA. This is an anchored VWAP, this white line right here. This is a volume indicator right here. Here we have some SMAs, so smooth moving averages. But the point, oh, dang, you guys didn't see that. Hold up, that was my bad. My bad, we're still learning. So I want to start sharing this screen for a second. Okay, so what I was talking about, which you couldn't see, these green ones, these green lines over here, SMAs. So these are smooth moving averages. This white with the faded area is a anchored VWAP indicator. Right here we have a volume indicator. So all you're getting from trading and from watching the charts is basically going to be the effect and the reaction of what's going on in the market, and that's going to be price action. That's going to be what the price is. These indicators, my point is that these indicators are also based on price action. So even if you have a bunch of indicators on your chart, you might think, oh, like it's, now I'm making it more like a video game because there's so much more going on. I mean, realistically, yes, there's so much more going on, but you went ahead and you cluttered your screen. Like, even my screen right now is pretty cluttered. I'm not going to lie. But it's still all of these indicators that you placed on your screen, they're all coming from price action. So there's no argument there. That's the only reactive, no, not the right word. That's the only thing that's giving you a response is price action, if that makes sense. Let's see what else I could say on that. I mean, that's it for that. I kind of went off on a tangent, but I mean, yeah, it's safe to say that, sometimes you get locked into the charts and into the markets, and you want to be sitting here for a while, and you're just going to watch it for hours and hours, which is completely fine. But like I said, like, you're going to be subject to the fear of missing out. You're going to be subject to that. You're going to be, trying to get into some trades that maybe you shouldn't be. You're going to be overthinking. You're going to not follow your rules, all because of your emotions, and all because of the amount of time that you've been sitting here thinking. So, I mean, it's just it's just something to think about, especially like when you're starting out trading. Again, getting the time on the charts to like read them, very helpful. But you want to make sure that you're trying to build those good habits beforehand, before you start really trading. I used to, like I said, I would go ahead and I'd be on the charts for hours and hours and hours. Now when I get on the chart, it'll probably be maybe an hour to 30 minutes. I'm honestly going to start getting onto them now more to start doing these live streams. If I am checking it like on my phone or throughout the day, like really quick, I'll just take a peek and done. Or tops 5-10 minutes that I'm looking at it, analyzing it. If I'm not at my computer, or if I'm doing something else, then I'm just gonna give it a quick little glance, because I don't have to think like, oh well, maybe this is happening, or maybe I'm not a fortune teller. I don't know what's gonna happen. So I have my times that I like to be on the charts, and those are the times that I kind of have scheduled, and I'll sit there and I'll put in the time. Hold up, I'm gonna open my window. It's getting hot. And be like, oh, it's getting hot. Yeah, I know. I'm wearing a jacket. I like wearing hoodies. Let me go check. There we go. Problem solved. Yeah, I like to be chilly. These big lights too. Like I just got these lights, so I could go ahead and start streaming and stuff. And honestly, they put off a lot of heat, which I didn't think they would. But I mean, hey, I guess that's what big lights do. Anyway, so let's kind of get into it. So we went ahead and I stopped my stream from this morning at 10. Or right here. I can't really do a replay on here on NinjaTrader yet. So can I do replay by candle? No, I don't think so. So I'm going to go ahead and I'm going to do this so that we can follow along with each other. We're going to make this bad boy pink, okay? Pink, purple, whatever color you want to call that. All right, so we got our little pink purple thingy line, right? Oh, I didn't mean to move that. That hurt. That's definitely not where it was. All right. Where are you? My bad. That stinks. Okay, so we're going to have it like that. So I definitely moved this trend line on accident. There's not a back button on the NinjaTrader platform. So sadly, we're going to have to go with where it's at right now. But anyway, we got this little purple line, right? That's where I went ahead and stopped the stream. We could go ahead and see that we went ahead and bounced off of some of these resistance levels again on the downside. So if you would have gotten, you could have gotten on some down trades, some sell trades right there. I just make sure the sprinklers aren't turning on. That would stink. Okay, anyway, so we could have gotten on some down trades right there, right? But what I wanted to show you was, like, let's see, like on these few candles right here, you could see, obviously, again, I touched this trend line and I moved it, so it's not perfect. I think it was a little higher up. But we broke through this up trend line that I had drawn. I'll make this a different color so we can see it better. We're going to do green. Cool. See the green better? So we got this up trend line right here in the green, and we went ahead and we broke through it. Yeah, we had a higher low, a lower high right after hitting this trend line, and you could see that we had our little support level over here as well. So it makes sense that there would be a little bit of resistance to the downside coming from this zone right here. So we go ahead, we pop back up for a lower high, and then we come back, come under, and you can see on this candle right here, I'll move my purple line. That candle right there, which is the 1017 candle, we pop lower, and we're using it now as support, right? So support on the sell side. So, and it's breaking our trend line. So in this case, let's go ahead. Let's go into trading view real quick, a little more pretty. All right, let me go here. Let me go 1 minute. Oh, that's a lot of chop. What did we say? We said 1017. 15, 13, 12, bingo. So our 1017 candle is right here. Yep, right there on that purple line. And then let's say we got into a trade. Let me just double check. I'm going to find a price for us. Let's just go for the absolute. The close of the candle was 17,262. Okay, so 17,262. Bang. So that's the close of that candle on NinjaTrader. Sometimes there's a bit of a difference, especially right now because I don't have it connected. I don't have TradingView connected to NinjaTrader, so it'll be just like a little quarter or a point of a difference, which isn't too big, but it's just good to know and make sure that, you know, if I'm going to go ahead and give you numbers, I want to make sure that I'm telling you the right thing. But so that's the close on NinjaTrader. The close is like right there as well. It's like a point off, maybe a quarter off. So no biggie. But yeah, so let's say we got in there because we had our break. Share. We had our break right here on our trend line, and now we're using this resistance on the sell side as a support for the sell side now. So now we're going to start pushing, possibly start pushing lower, right? Because we broke the zone, and we broke our trend line, and you can see these two bullish candles they're not as heavy as this bearish one, right? This bearish one is an engulfing candle, so it's engulfing these two little bullish candles, right, in the resistance level for the sells, and now it's going to use it as support, right? Obviously, again, we can see what occurred, but this trend line was already drawn. This zone over here with the support, with the resistance for the sells was already drawn, right? Before 10. So I had those levels drawn already. So it goes to show, if you put like, let's say I had an alert on that trend line, what you can do on certain platforms. Trend line was something like that. Definitely not that high, but I want to say it was like something like that, right? So that was our trend line, and then we get in on the break, and then obviously we find a good spot to put our stop loss, which I would argue, what are we looking at? Probably like 15. Right here is about 15 points, right? Can I do math? I can do math. That's 16 points right there. So that's not a terrible stop loss. You just want to make sure, obviously, since we're trading futures, and I'm not trying to go into the intricacies right now, but you want to make sure that your position sizing is affordable, right, for your account size, because you don't want to go ahead and put 100% of the account or 50% of the account on blast. You don't want to put it on one trade, because you're basically gambling at that point. The whole point of trading is to go ahead and have a lot of different, or a lot of opportunities to potentially make money, right? Trading is a statistics probabilities game. So the more shots that I can fire, the more shots that I could take for the hoop, the more probable it is for me to get good trades. And obviously, if I'm going ahead and I'm throwing a Hail Mary, maybe there's an interception, or if I'm going ahead and I'm putting all my money I'm going all in on this one play, it could, if it goes bust, I go bust, and my account is zeroed out. I'm done for. So that's something that you need to consider, is when you're taking trades, you want to make sure that you're taking these trades that go ahead and allow you to take multiple trades, or when you're placing these risks and you're putting this money up for these trades, you want to make sure that your risk management and your trading plan allows for you to continue to keep trading even if you lose this trade, right? Because easily enough, we had, let me draw, the zone was here, right? Just about. I think I had it on that wick because that was the first one, but probably could have moved it over here, right? Which would have been a little sketchy. No worries. Anyway, you could easily go ahead and say, oh, look, I'm going to go ahead and buy it now because we're bouncing off of this resistance on the sell side. So we're going to use it as support, right? So someone could have went ahead and they could have bought it here, right? So now I got my risk under here. Let me just get rid of this real quick. Now I got my risk under here, right? And I'm shooting for, let's just say, these highs over here, and I got my stop loss over here by these lows, right? I like that. And boom, goes ahead and it hits the stop loss. You know, for whatever reason, the market wanted to move lower, right? It wanted to trend lower. So, you know, if you were this guy that went ahead and, let me get rid of that. That's annoying. If you were this guy and you went ahead and you put a trade going upwards, again, you're obviously wrong here because the market goes ahead and decides the direction that it wants to go, and it wanted to go down this time. But it's not to say that that trade is a bad trade. The only thing that would go ahead and dictate if this was a bad trade, I mean, you have a few things that would dictate that this is a bad trade, would be obviously your risk management, because if you're risking way more than your account size allows for you to do, or that your trading plan or your strategy tells you to risk, then, you know, you're going ahead and you're not even listening to your rules. You're not even listening to your strategy at that point. So you got to go ahead and make sure that the risk that you're putting up is equivalent to the strategy, the trading plan, and the account size that you have, right? Because obviously the smaller your account, you know, the less that you're gonna put up for risk, so that you're able to have more trades. The whole thing, that the game is in numbers. The more trades that you can take, the more chances you get, the bigger the percentage can be, right? If I shoot more shots, I can make more wins. Obviously, you're not gonna hit every shot, you're not gonna hit every trade, but again, if I go ahead and I put all my money into one trade, like let's say I had $1,000 account, and I put all my money into this one trade, and that was all I had, you know, then boom, I just lost my $1,000 because I didn't risk my money correctly, you know. Where instead I could have done $100 per trade. If you have $1,000 account, it's kind of pushing it because now you're basically putting 10% up. I would say anywhere. I mean, the soft rule is going to be 1% to 2%, right? That's what a lot of traders go ahead and say. I mean, it's a pretty smart number to use. So let's say I had $1,000 account and I go ahead and I only do 1% for every trade, then I know that I'm going to have 100 trades until I zero out my account. And if I go ahead and let's say I lost 100 trades in a row, or again, this goes into risk management, your strategy, your risk to reward ratio, your trading plan, right? Like let's say I lose 100 trades in a row, then obviously that strategy is not, it's probably not great, because you got to at least hit one, depending on the strategy, because again, you gotta have a proven strategy. You gotta have something that works, and you have to make sure that you're implementing it correctly and that you're following the rules of the strategy and you're executing it to the best of your ability. You know, you can't let your emotions get to you. You can't have the fear of missing out. You can't stray from your trading plan, because if I go ahead and let's say I have my 3 strategies, right? I have the turtle strategy, I have the trend line strategy, I have the support and resistance strategy that I trade. And let's say one day I say, oh, I'm going to go ahead and today I'm going to trade head and shoulders pattern, which is a candlestick pattern. Then I'm basically throwing my whole trading plan and everything that I've studied up for and that I've built out of the window, because I'm trying something that isn't the way that I trade. I'm doing something different. That doesn't necessarily mean, oh, don't try anything different. Don't add things to your system. Don't investigate or explore on different strategies. That's not what I'm saying. But you want to make sure that if you're going to implement something, that you're doing it correctly and that you're going to be consistent and disciplined with whatever it is that you are trading, whatever that strategy may be, right? For the risk to reward ratio as well, if you're going ahead and you have 100 trades, right, we're putting 1% of $1,000, so that's going to be $10 per every trade. And depending on the strategy, some of your wins could be big, right? So like let's look at this example, and I'll use the same math for the risk management while I'm explaining this. But so let's say we got in, like I was showing you on NinjaTrader, we got in on that trend line break, right? I said 16, so that would be 88. Boom, we got our stop loss. Is that right? Nope, that is wrong. It should be 78. Yeah, it should be 78. My bad. That's kind of close. Yeah, I don't know if I like that stop loss. I probably would have put it like up here. So like I said, like 88 maybe. So that's like 20 points almost. That would have been, to me, I think that's a better one. So it's looking 25 points right there. So yeah, because we're right here at this zone. So if we go ahead and we break above this zone, then I'm going ahead and kind of backing away. Obviously, I want to be out of that trade because there's a pretty good possibility that we're going to move upwards if we break this zone. But anyway, so let's say we put our stop loss there, right? Okay, we got in on that trend line break right there, boom, and you got a nice little right at the initial move down. Obviously, you're not going to catch the absolute bottom. But let's just do this math. 62 to 183. Am I right? 183. So you're looking at 60 plus a 20. So 80, 85, give or take 85 points. So, I mean, that's a pretty substantial trade. And let's say you go ahead. Let's do some type math. Can I type on here? Yes. Boom. So let's say you're doing your 1%. 1% of $1,000 account size equals $10 per trade, right? Oh, can't see that. There we go. So you got that. So we're looking at this, and we're going to put our $10 on this trade, right? And the way that futures works is a little different from some of the other like, it's obviously each financial market has its own intricacies, and the buying and selling and the ratio, the numbers, the calculations on pricing and your return on certain movements is different. So I don't necessarily know how to use this TradingView tool specifically for futures trading. I will tell you that the risk to reward, so this says that we're risking right here, our stop is 25 points, right? Oh, look, our target's 78. I was completely off. Either or. So it says that our risk reward is a 3 ratio. So the reason that is because we're risking 25 points, okay, for a 78 point target. So 75 point target. So we're shooting for 3 times what it is we're risking, right? And just to clarify, we have our risk, we have our $10 at our stop loss, and so this would be $30, roughly speaking. Okay. Again, this is like super simple, basic math. This isn't the actual math for futures at all. I'm just showing you how risk to reward ratio works and how position sizing and making sure that you're risking the right amount for your trading plan and for your account size, how all of that works. Again, Forex, futures, stock market, all that stuff, they have their own intricacies to these calculations, and each one is different. Each one is separate from each other. So you need to make sure that you go ahead and you do that research on whatever asset you're trading to understand right over here what these prices are, what these ratios are, what for futures contracts you trade. For futures, you trade contracts, right? So you need to understand what's a contract, what's the pricing, what does this movement actually calculate to, how does my stop loss work, so on and so forth. Same with foreign exchange. You trade lot sizes, right? And then the math isn't necessarily in points like it is for futures. It's going to be in pips. Okay, so all of these different financial markets, they have different lingo and they have different rules and different ways that they calculate this stuff so that you're able to take trades. So just to go ahead and reiterate, like, you want to make sure that you know all that stuff, right? This is just super simple math with the risk to reward ratio to show you kind of what I meant by going ahead and putting these trades on. If you go ahead and you put that 1%, right, and you shoot for 30, now you made 3%. So you risked 1% to make 3%. So now your account, even though it's $1,000 account, now you're looking at a 3% gain, which is phenomenal, like just for one trade, which then your whole account total equals now $1,030, right? So it's like, whoa, I just made $30, right? So I mean, again, social media will go ahead. They're gonna really show you what the gap is, and there's a lot of over exaggeration on social media. So I don't. If you guys are watching this, like, I don't want you to necessarily freak out about what people are making. You have to go ahead, and this is something that I had to learn through experience and going through it. You have to go ahead and you need to go through your own journey, and you need to know that what you're doing and the path that you're taking is your path. So you're going to see people that are doing $1,000 a day or 10,000 or 100,000 a week, blah blah blah, so on and so forth, right? But obviously they started from somewhere, and they most likely started from where you're starting from. So you gotta get the experience, you gotta get the steps in, you gotta get the hits in, you gotta get the time on the charts, and you just gotta learn this stuff. And you have to start somewhere. You gotta start small. You need to learn and understand the market and what you're doing. You're not gonna hop from not trading to making $1,000 a day like that. It takes time, and I mean, it's not the prettiest industry. It's not the easiest thing to learn. You have to learn how to control your emotions. You're going to learn so much about yourself while doing it. And I think sometimes, I mean, obviously it's good to have those figures as like motivation and to kind of see what you can become, and so that you can have that vision too. But I think a lot of times too, it's important to know that, they're at the top of this for not necessarily for a reason. I mean, obviously they've put the time in, so they're at the top of this because they put that time in. So you want to go ahead and you want to make sure that you're putting the time in too, and you don't want to let all of that noise cloud your judgment. You know what I mean? Because this trade right here, this is a phenomenal trade. That's a 3% gain on one trade. Again, you're probably not catching this whole move. I mean, it depends on what kind of strategy or what kind of trader you are. Like maybe even hold it longer, and you get the 4, which is like right around here, right? So maybe you get that 4. But it obviously depends on what kind of strategy you're going to be trading and whatnot. But like I said, like, you don't want these gurus, or even, I'm not saying that everybody's a guru, but there's a lot of professional ones that are actually legitimate, that are on social media, and that I talked to a few of them. But you just want to make sure that, you're not going ahead and comparing yourself to them, because again, they've been doing this for years. they've had the practice, they've grown, they understand it, they learned it and they did their time. So you got to do the same, and just don't compare yourself to what they're doing now, because they're on year 10, right? Whereas like me, I'm on year 2, or maybe you can say year 3, but really it's year 2 of consistently trading, day in and day out. So I think that's something that's very important too. This trade right there, just 3%, even if it was just a 20, right? Let's say it was just boom, easy, times 2 right there. That's a great trade, bro. Especially when you're starting out. You don't need all the eggs at at the beginning, right? I mean, you might need them. It's more of a want, definitely, but that money will come. It'll come once you learn. What's that one? There's this one phrase. I don't know if you guys have heard the speech. Why is this like slipping my mind? There's this one speech with this gentleman that says, I'm going to paraphrase it. He says, "You go ahead and set the goal of becoming a millionaire, not because of the money you'll make, but because of the person that you will become from setting that goal and from becoming a millionaire," right? So like I really like that quote. And to add to that as well, it's not only the person that you become. Well, hold up. It's not only about the person that you become, right? The biggest gain to becoming that person that can make $1 million is that you can do it again. So once you go ahead and you learn this skill, and you sit at it and you go at it day in, day out, not necessarily every day, that's not what I'm saying, but consistently, you're staying disciplined with it, and you're educating yourself and you're growing constantly, you'll go ahead and you'll start to see that growth, right? And once you become that person that can trade, once you become that person that can be profitable, now the money will follow, because you've become the person that you needed to actually be able to do it. So I think that's something that's really important just to point out. But anyway, so this was the move that we were looking at. It's just cool to see. We had just hopped off at 10 over here when I was showing you live, and then we had a break of this resistance level and a break of a trend line, and we had a nice move down, a nice push down. I'm gonna get rid of this trend line because it's gonna be null and void. Let me move my pink line here, and then I'm going to change this color. I know it looks crazy. I'm used to seeing all the lines and stuff, so I can tell the differences between everything. So I'm going to try and use my mouse a little more and circle some things, and that's why I'm using these lines, so that we can stay on the same page. Let's not accidentally take a trade right now. That would stink. All right. So anyway, so here we are. We're looking at 1121. Okay. So we have our boom, boom, break, move down, right? I had drawn this trend line also before 10, before I ended it. And you can see it follows. Boom. We get a higher low, a lower high. Why do I keep mixing those up? We get a lower high here near my trend line, comes down, moves further, right? And then we get a little bit of consolidation here. So we get our valley, our lowest low, and then we consolidate, boom, and now we break our trend line, okay? So we break this trend line. Do I want to hop back in to trading view? I think I do. We're going to hop back into trading view. We said, what time did we say? My bad, team. 11:21, 11:21, 11:20, 11:06, 11:21. Boom, and then our trend line break. Just hopped in NinjaTrader again real quick is the next candle. So the trend line break is the next candle, and we got a price on the break. We'll go a little higher. We'll just go 75. 75 is like at the top of that wick. on this candle here. So let's do that. Right there. Boom. Okay. So a little high. And then definitely good spot to put this stop loss would be right around here at this zone. If you wanted to come a little closer, I mean, NQ is just very volatile. So again, this goes into knowing your assets, knowing how they move, following them, having that experience, and understanding, maybe a 10 point isn't a big enough stop loss for me, especially when it's this volatile around lunchtime, right? So we get a little stop loss. We got resistance level here. Obviously, we had a big turnaround on our price action for whatever reason, right? So we got in our trade. Our trend line was something like that. I want to say something like that. So we got in, boom, on our buy, right? Let's do our numbers again, just for the giggles. So we got our $10, right, that we're putting up to risk, and top of the move, boom. Yeah, and the top of the move is 3. So if you held it all the way to the top, again, you're probably not getting out at the top, unless you got stone cold balls, or you're really listening to your strategy and your trading plan. Especially to start off with, you're gonna run into the obstacles. You're gonna, fall off every now and then. But if you can really listen to your plan, depending on what it is, you can catch some of these decent moves. So you're either catching, maybe you catch that 3. So that's going to be times 3 of what you put up. So we'll put our $30 out of our account, right? Oh, let's do a total account size now equals at the moment $1,060. Boom. And then let's say there's you don't want to get that fear of missing out too, that emotion when it pulls back on you like this too. You gotta be careful, because obviously price, again, market's gonna move wherever it wants to move. So you decide when you want to get out. Depending on your trading strategy, you might go ahead and you might make that up to your trading strategy, and then your strategy will decide when to get out of a trade. So you just want to make sure that you understand that risk and how you're going to go ahead and implement that into your trading plan, right? But you could see this low down here gets you down to like 2, and then let's say you held past that. Then let's not hit that wick. That's crazy. So we'll just go 5. Even 5. The peak goes to around 5. You can see we go to this lower trend line that I have, downtrend line that I have. So we get pretty close to that. So maybe you feel like it's a good. You might be getting ready to get into more, right? Or you might go ahead and have some sort of bias that we're going to go ahead and we're going to go lower and break, right? Which it does over here. If we want to, we could calculate. I mean, here you have a trade as well, because we broke this big trend line. I don't know if I have this trend line on NinjaTrader, but we got it here on TradingView. So you could go ahead and you could calculate that as a trade as well, because we broke that trend line. I don't know if you guys noticed here, but here we had a little bearish candle, right, on our move up, and you can kind of see how we had a support level. So it created this little shelf that we went ahead and bounced off to get our price going higher, right? Did that happen over here? A little bit. I mean, you could kind of say, again, all these levels, I'm still learning how to draw. I want to learn more about liquidity and order blocks, because I just know basic support and resistance levels. So to me, I would go ahead and see this and I'm like, oh, look, we got a little bounce right here, right off of this previous high over here. Which, I mean, it's there. You can see it. But yeah, so I want to learn a little more so that I can implement a bit more numbers and a bit more statistics to it. But anyway, so what I was saying was we got this move, right? And let's say you're over here at this peak and you think it's gonna cross that line, don't necessarily put any more risk into the trade unless it does cross the line. So if you were over here and you're still in this trade, so you're up 5 almost, right? So you bodied all of this price action down here and you just let it run. And then we have this break here and you say, oh, I want to get into, maybe I'll put 1 more percent, right? I'll put another percent. So now we're going to put another 10 over here. So let's take this math. Let's dumb it down a little bit. What was it at? 30 for that first trade, right? So we're going to go ahead, hypothetically speaking, that we stayed in this trade, okay? And then over here, we got into another position with $10 at our stop loss. So we're putting 10 to risk again. And then we will see, oh, nice little pump and dump. Yeah, so it looks like at the peak, you're looking at like around 7. We'll say 7, right? We'll just go down a bit. Let's say like we'll say you got 5 out of this one. And then this one, we just put it at the same level. So you're going to, let's say you exit both at the same time, right? Or maybe you just exit that one before you get into this one so that you don't have to worry about what's going to happen. So you're looking at 10. So this one would be $100 for this trade. And this one would be 10, so $50 right here on this one. So 150 for both of these, which were just trendline breaks on $1,000 account, 1% risk. And you can go ahead and see, let's see how many, 175. So I mean, this was a move. So yeah, so that's 25. That's almost 200. So that's 225, 225 point move for this trade. The bigger one that was risk ratio 10. So this was 225 point move, and then over here you got a nice. It says 295, so you're looking at 5, so about 105 if you go for the 5 ratio. If you go all the way to the top, you're looking at another 50 points. So one's 275, or no, yeah, no 175. So yeah, it's just simple breaks. The math on that was 150. So we'll say that would be 180 on the day. So you would have grown your account size for this day on basically just trendline trading. 18. Is that right? That's right. 18%. 18%. You would have grown your small account size with just simple trendline trading, and having a couple more rules on your position sizing and on where your stop loss, I guess, are going to be, right? Because again, you could have easily went ahead and traded it again. You if you lose money, you did something. All right, let me take that back. You didn't necessarily do something wrong, right? The market is going to do what it wants to do. When you take a trade, you're basically flipping the coin and you're betting on one direction that it's going to go. The reason that we use like statistics and fundamental analysis, technical analysis, sentimental analysis, which is like basically like psychological, like what does the market want to do? What do traders want to do right now? What's their bias? That's like sentimental analysis. Fundamental analysis is news. Technical analysis is going to be like all of this artwork that I'm doing, basically, like a caveman. But yeah, so what I'm saying is, what was I saying? Dang, I lost my train of thought because I went into that. But what I was trying to say basically is that, based on whatever strategy or whatever analysis that you're doing, you could have easily went ahead and gotten into a sell order, possibly. Like maybe you went ahead and you had a trend line that was something like that, right? Down over here though. So like that. Oh, you see this, and you want to get in on the sell, Oh, but it's gonna keep going. It's gonna go lower since we broke this this support level over here, right? We broke it. We broke through it. This is the one I'm talking about. We broke this support level over here where my mouse is with price action. So we're going to keep going lower possibly, right? So I'm going to stay in the trade, but then all of a sudden it starts to go backwards, right? So this is where it's important to have your stop loss, because let's say you got your $10 stop loss, right? Boom, hits, you're out of the trade. And then now you see it break this trend line and you're like, okay, let me get up. Let me go ahead and take a buy, right? Because obviously this trade was wrong. The market's going to decide what it wants to go ahead and do every time, okay? You and your strategy are going to determine if you're successful in the markets, and your execution of that strategy, of that trading plan, is what's going to go ahead and determine your success. Very simple. It's super simple. It's all a numbers game, really. Because yes, I went ahead and on this trade, it hit my stop loss. I lost my 10, right? So I lost 1%. So let's just say we took that one too. Let's add it in there. So let's say we lost that. We lost that trade. So now we're at 17, and then we're at 170. Okay, because we lost one trade out of, so we had 3 wins and 1 loss. And our wins, 17%. Okay, I'm going to leave that. So our wins were 17%. 17% equals 3 wins, and then 1 loss equaling 1% loss. This is easy math. Okay, if you can't understand this, then you need to go back to like middle school math. All right, this is simple stuff. Okay, you won 3 times, you made 17% of your account, and because you were smart and you had your stop loss here on this trade that you lost, you only lost 1% on that trade. And this is what I'm saying. It's a probabilities game, right? Because let's say that you went ahead and you lost this trade and you didn't get into this next one, okay? You're missing out on 5% right there. Again, don't have fear on missing out, but what you need to do is you need to execute your strategy, whatever your strategy is. You need to execute it to the T, because here, if I'm trading the trend line strategy, then I know when it breaks my trend line, I'm in the trade, right? So if I don't take this trade for whatever, I mean, I'm not saying that there's probably some good reasons to not take a trade. I can't think of any off the top of my head. Obviously, like if you can't get to the computer or if there's something going on or whatever, but like, let's say you just lost this trade and now you get extremely emotional and you see it come and it breaks this trend line and you're like, no, well, I just lost money. I don't want to get into this trade, or I'm getting scared. Like now I'm fearful that my strategy doesn't work and that I'm going to lose more money if I take this trade. I'm going to lose another 1%, right? But you just went ahead and you missed out on 5. And this was your strategy. This is your trade, again, depending on the strategy that it is. But I'm saying that you need to execute your strategy to the T. You need to follow your trading plan. If you plan a trade, then you trade the plan. Like, it's that simple. I tell myself that all the time. But this is simple math. You want to have those stop losses. Let's say you didn't have this stop loss, right? Or let's say, as it's moving up, you're like, no, we're going to turn around. Let me go ahead. Let me make it bigger, right? Let me keep on making it bigger. Let me draw it some more, right? So now we went from, so it looks like we're at like 20 points. Roughly 20 points was our $10, right? So like, let's say we went all the way to like 40. That we pulled it all the way back to like 40 points, right? Now, instead of $10, we just made our risk now $20. Okay, again, we're just doing simple math. This isn't specific to futures markets. But right here, since we went ahead and we pushed back our stop loss, now instead of risking $10, because I was at 20 points, we did the math for it, blah blah blah. We did the math and we put $10 on our 20-point stop loss. Okay, Now, since we doubled our stop loss size, we now went ahead and doubled our risk size. So now we're risking 2%, right? Let's say, again, we went for 60. Oh, we're like, no. Here it's starting to consolidate. It's going to come down. It's going to come down. All right. Now we're at $30 that we're risking on this one trade. That's 3% of our account that we're risking on our one trade, on our small account size, by the way. So now, let's say you did that, right? And you lost that 3%. Now we're going to take 2 away from here. 2, so 50, and then you're looking at 50 here. Okay? So now we just lost 3%. Whoa, that is not 150. My bad. Now we just lost 3%, and that's not 13. What the heck? 15, 3. Okay, so now we just lost 3% on a trade that we only planned to risk 1% on, which would have been the $10, right? So you got to make sure that you're going ahead and you're planning your trade and trading your plan. Follow your strategy and trade it to the team, because the strategy is there for a reason. This is what will give you that edge. This is what will give you those probabilities, right? If you look at this trade where we went ahead, like let's say that you lost those $30, you lost that 3%. That was 2 more possible trades that you could have taken. That could have been this one here, and then that could have been a trend line that was like, again, we're just like going really quick. That's a pretty shit trend line. Something like that, okay? So that could have been like a trend line that was like that, right? And it's still like really bad. That's a little better. Okay. I'm looking over here, by the way, when I was trying to figure out if that was a good trend line or not. I'll get rid of that. But again, like that was 2 more trades, 2%. So 1%, 1%, 2 more trades that you could have taken. You get what I'm saying? So like, let's say you took this one, right? That would have been one of these. Boom, taken it. Oh, we found a trend line break right here, right? Depending on where you put your stop loss, you might have gotten hit here too. But like same thing, like you could have taken a trade over here as a sell on a trend line break. Maybe it was a little steeper. Maybe your trend line was a little steeper. I don't know how you wanted to draw your trend line, but either or, I'm just saying for risk management purposes, for trading plan purposes, strategy purposes, those 2% was 2 more trades. If you would have just listened to your stop loss rules, then you would have been golden, and you would have had 2 more trades that you could have executed instead of losing it on that one trade, on that single trade, because you thought it was going to turn around. Because now you're basically fearing losing that money, and that's a whole other problem. Another cool thing too that I would say, and is definitely a good suggestion, let's say that this red line right here is my stop loss. So let's say like we start moving up, right? And then we see it dips, it comes back up, we break this trend line, right? And let's say our price, let me do that. Let's say we're trading somewhere around this green line up here that I got here. So this is where our price is at. And right now we're at 7 R, which means that is 7 times our risk. And I want to go ahead and I want to lock in $60, right? So that would be right here. So I just moved. Obviously, it depends on the platform that you're utilizing, how you go ahead and do this. But like this red line was my stop loss, and I dragged it from there up here. And now my stop loss, this is called the trailing. Well, the trailing stop loss can be automated, but this would basically be like manually trailing it. So I basically just raised my stop loss to up here. And so now if price were to come back down here, so let's say I just kept holding the trade, and then boom, over here, let me circle, over here, it went ahead and it hit the red line. So it'll exit me out of my trade. It'll sell my position for me, and I will take that profit of $60 because we're doing our 1% out of 1,000. So $10 risk times 6, so $60. So you would have trailed your stop loss, and you can keep doing it. Like let's say now price is up here somewhere, and we like this little consolidation zone. I'm like, okay, let me just put my stop loss there at that little consolidation zone. Let's see what it is. 8. So that's times 8. So that'll be $80 on our 1% of 10. So 8% on this one. If you did that and you just locked that in because we trailed our stop loss up while price is moving up, right? So that's another good thing. You could also do, again, it depends on your trading plan, on your strategy, but you could also do like, I think it's called positioning out. So basically, I would go ahead, depending on the asset you're trading, there's different ways to do this. So make sure that you know what those intricacies and what those details are and what those calculations are so that you're doing it correctly when you're trading. But you can go ahead and you can position out of trades. So let's say that I had, in it for futures specifically, I had 5 contracts on this trade, right? And maybe I wanted to go ahead and I wanted to take out half of my profit, then I can go ahead and take out like 2 or 3 contracts here at this price, right? And I can execute that, and then I'll still be in my 2 contracts from down here to continue. So I'm going to leave those 2 to continue, even though I took out 3 and I already profited on those 3, right? So it's just, you gotta figure out what your strategy is, what your trading plan is, and execute it to the T. You don't want your emotions to get in the way of your trading. Let me hop back into NinjaTrader and let me see if there's anything else I wanted to show you. I just want to show you guys those trend line breaks and stuff because it's a really simple strategy and I like it, and I'm still practicing and figuring it out. But yeah, I mean, you can see that it works. I mean, it's very simple, it's very easy, and you got to be careful, and you got to use a couple other like confluences, like support and resistance, and kind of see what's going on with the news to make sure that there's nothing in your way or nothing's going to mess with you. Send it flying in the other direction, right, or bring a lot of volatility. But yeah, I just wanted to show you kind of how today played out, and go over those trading plans and risk management, and what you need to have in mind when you're doing this kind of stuff and when you're trading, right? They don't say that in the little Instagram marketing ads all the time. Up sharing. Cool. Let me see. Yeah. Let me drink some water. Honestly, this is the most, like, I don't really talk. This is the most I've ever talked. Just give me like a little second. I cleaned my room a little bit. I kind of have a lot of covers and stuff, and I just like throw them on the bed. I like to be wrapped up in covers. So probably gonna get a couple more, so I can just make it like a big pile, right? Maybe, I don't know. Maybe it does be getting hot though, so that might be something to consider. I'm also gonna get a haircut tomorrow, most likely. Probably clean this up a little bit. Just try something new. Let's see what else can I talk to you guys about. I will say too, if we want to go into a little personal stuff, I went ahead and I'm kind of creating my new like trading plan. Obviously, like for the strategy stuff, for the 3 strategies, I'm going ahead and I'm creating that plan and writing it out, and I want to have a checklist, and I want to make sure that I have those 3 set up and that I have them in my head and I have them written down so I can go ahead and, like I said, I can execute them to the T, and I can set my alerts correctly, and I can have the tools that I need to go ahead and trade these things the way that I want to, the proper way, right? So that I can go ahead and be successful and make money with these strategies. Because I do think these strategies are successful. I mean, I've seen the success. I do normal trading. I do the demo trading with it. That's what got me my funding, right? And I'm just back testing and testing it out and seeing how it works. But like I said, I want to make sure that I got the intricacies down. I want to make sure that I got a checklist. I want to make sure that it's set up for me to go ahead and properly execute and trade it. I don't want there to be any if, ands, or buts in the trading plan. I want it all to be written out. I want it to be figured out. I want it to be like, if this happens, then this is what happens. Okay, if this happens, this is what happens. So there's always a reaction. There's always an action to a reaction. Okay, I don't want there to be any white space, blank spaces, gray space. Everything is answered for, right? So that's kind of what I'm going through right now. The trading plan too. Since I failed the funding, I'm going ahead and I'm going to be demo trading for a little bit because like I said, I want to get these strategies down that I like and that I know I can operate with and do well with, but I want to make sure that they're written down and that I'm going to execute them properly and then I got them down to the T, right? So I'm going to be demo trading a little bit because of that. That's reason one. Reason two, demo trading because I just started working again. All of last year, I was basically living off of my savings, which honestly I can't say it wasn't a bad decision. I mean, obviously looking back at it now, it's like, bro, I could have done a decent amount with it, and like I know what I could have done with it now, but it was the cost of doing business. I was learning how to trade all of last year. That was like my main focus was trading and just learning it and like I said, putting on the hours, sitting there meditating, literally like sitting with myself and being like, why did I do that? I still do this. I still meditate. I still make mistakes, but like really sitting there and like analyzing myself, and trying to self improve so that I could be a better trader. They don't talk about a lot of people don't talk about like how mental this is. You're gonna learn so much about yourself, and you're gonna figure out what makes you tick, and your fears and all of that is gonna be reflected onto your actions, while trading. So that was the cost of doing business for last year. So yeah, so I was living off my savings, learning trading, just picked up a job and kind of figuring it out. I got to get used to the schedule. Also trying to move, not the word isn't laterally, but like, so right now I'm working at a gym, but I want to work at a different gym because this gym's going to pay me more and it's going to be better hours because right now I'm working overnight hours. Um, doesn't really work with my training schedule if I'm sleeping during the day. Uh, and when I wake up at like 2 p.m., 3 p.m., and I'm like dead tired because you just woke up. So yeah, so this other gym, there I am gonna be getting more hours and more days of work, but it's gonna be during the day. So that'll be helpful because I'll at least have like the afternoon to myself or the early morning, and I can sleep at night like a normal human being. But literally, like, oh my, last today, well, I don't even know what to call it. I get extremely confused with my days now too. Um, but last night I didn't sleep at all. So I had like a 25, 26 hour day basically because I just couldn't fall asleep. Because I've been working these overnights and I only work 3 days a week, but it just, it makes a difference. So we'll see how this goes. I'm trying to move from this gym to the other gym to work there. Um, since I went ahead and I was living off my savings for a while. I didn't time it correctly, and so I went into just like a little bit of debt. It's not anything like crazy. I could work it off in like a month or two. It's not terrible, but it obviously is a little, what's the word? It's a little demotivating, Well, not necessarily demotivating, but you just also not regretful, but you just wish that you could have done it differently. Um, had I timed it differently, had I, I could keep saying, had I done this, had I done that, but that's not how it happened. So I got to deal with how it is. So we got a job, so we can go ahead and pay off the debt, and we can make some money, and I can go ahead and put that money to work and put that money, uh, because now I know that I'm gonna trade. Like that's it. I know I'm gonna trade. There's another business idea that I have that I'm working on, but I need capital to go ahead and get a consultation from an attorney, and then to go ahead and get an LLC and get an application built and so on, and marketing and so on and so forth. So that's a whole different thing. That's separate from the trading stuff. But I want to go ahead and obviously I can pay this debt off with my job. And I mean, at least I work at a gym. I love going to the gym. This is also the gym that I go to. So hopefully I get this one because it's the gym that I actually work out at, which will be cool. But yeah, so like just get this money, pay that debt off, and then use that money to go ahead and do the trading stuff. I got a lot planned for trading. I'm going to do a live account thing. I'm obviously going to keep doing the funding challenges. I know I can pass this next one. What I was going to say for the trading plan is that I want to go ahead and I'm going to do. I was doing the 50K challenge. Excuse me. And I got funded 50 grand. But for this next one, I want to go ahead and I want to do the 151. Reason being is because the drawdown is a lot higher. And for these strategies that I'm trading, I need a little more room. Even though, if you understand futures lingo, well, I can give you a quick explanation right now. NASDAQ, E-mini, NASDAQ contracts, which is the ones that we've been looking at. Those are $20 a point. So every point that they move, it's $20. But like you saw, the volatility when I'm trading or in the morning, whenever it is, you need a decent amount of stop loss. So my stop loss sizing was pretty big, and my losses were substantial. But this is also when I was trading with intuition and so on and so forth. And then like towards the end of the funding, when I was about to lose it, is kind of when I switched gears and I started to see some profits come in, even though there weren't payouts. But that's why I'm kind of switching gears and I'm doing these super simple strategies that I know I can go ahead and I can execute properly. But anyway, what I was going ahead and saying is that I want that bigger drawdown so that I can kind of catch like these daily moves, do a bit more of a swing trading style, and kind of play around with that and practice that. I do like scalping, but I just don't think it's going to work for my time frame that I'm going to be trading once I get this other gym job. So yeah, so I need to figure that out. I'm going ahead and I want to work on algorithmic trading, so like creating a trading bot for some of these strategies so that I don't necessarily have to be sitting at the charts all day, and it'll go ahead and execute some of these trades for me. That would be extremely helpful, but I'm looking to do that later down the line, not to worry about that right now. My main focus is just get this job, and if I can go ahead and figure out my schedule, my day-to-day schedule, since I've been doing these overnights, obviously like my sleep schedule is messed up. I'm dead tired. I look dead right now. I'm dead tired. I was dead tired this morning. I'm just very tired because my sleep schedule is completely out of whack. So it's very difficult for me to kind of get some work done when I can't even think. Is that excuse? Probably, but it's truthful. Like it's really hard to think sometimes. But I am enjoying doing this stream, honestly, and like talking this stuff out, and even the trading stuff too, because it's cool. Like this stuff is my passion. Like I went ahead and I decided. That's why I'm saying all last year that was just the cost of doing business. Like I went ahead and I figured out I'm gonna be a trader. I want to trade, and this is what I have to do. Like I really don't see another way of me having the things that I want out of life. If it's not trading, or even if it's this business too, the app business that I want to start is really interesting. And there's a lot of intricacies to that, and that would be something else, obviously, that is on my list to go ahead and complete and to go ahead and make the life that I want. But trading is there, like it's stuck. If I can't, I literally, like, I don't see myself not trading at all. There's not. It's like breathing at this point. not not naturally, not the profits, not yet. But actually, sitting here and watching the charts and wanting to execute trades and learn more and all that. Like that's like ingrained in me at this point. So there's not really any going back now. And like I said, cost of doing business, the debt, cost of doing business, just learning. I mean, everyone's at different points, and I would like to, I don't want to assume, but I'm guessing that most of the people that will watch this video or most of the people that are following me and getting into trading, they have, you guys have your own struggles too. And you have stuff going on in your life, and whether it's debt, whether it's family, whether it's school, whether it's work, overwork, not enough work, not enough money, so on and so forth, right? Injuries, whatever it may be. But everybody has struggles, and I don't know, like at least for me, when I'm like on the chart, oh my bad, hurt my finger. Like when I'm on the charts and when I'm like looking at trading, like nothing else. Like I'm zoned in. I'm locked in to the chart and I'm focused. Like there's no noise. Like I was saying earlier in this video, there's nothing else going on. Um, I mean, obviously there are things that can take me out of the zone, which annoy me. Like I don't like there being noise. Like if there was actually noise, then I would be bothered. But what I'm saying is like there's no distractions that are there. Like there's not anything that I would go ahead and be like, oh, like I gotta do this, or like, oh, my, I gotta go run and do this. When I'm locked in, and I'm focused, and I really like that. Like I just feel um clear. Like there's a lot of clarity in it. So like I said, trading's the thing. No matter how it gets done, it's gonna get done. And that's about it. I've got that plan for the prop firm for the funding. I've got the plan. I've got a plan for my live accounts when I start doing that. I feel like that stuff with the live account, the personal live account, my personal capital. I might make it a little more interesting, a little more fun. Um, depending on what I want to do. So I got a couple ideas that I'm kind of shooting around in my head. Like obviously building a small account. I feel like that would be um, a very useful video, a very useful kind of experiment, right? So like to kind of help you guys learn how to build a small account. So it's like, oh, like maybe I'm starting out with $100, or maybe I'm starting out with like $500. Like, how do I go ahead? How do I build this account to like 1,000, 2,000, 5,000, right? So like, how do you do that? So there's certain ways to trade that and do that, obviously. And then I got a couple other ideas that are a little more risky and probably a little more like just entertaining and fun. Uh, a little more on the gambling side, but I I have strategies that I'm going to implement for that too. Again, probably like I would imagine if some of the people that I talked to heard me say that, or like heard what I'm thinking, they'd be like, "You're crazy. That's just a waste of money. That's a waste of time." And we'll see. I mean, it's not anything that I can't. Again, I'm not saying I'm not going like full port. I'm not over leveraging. I'm not planning on going into debt to do any of this stuff. Um, so like I went ahead and I planned this out, and it's within my capabilities. In the future, soon it'll be within my capabilities. But like I said, like obviously I went ahead and I assessed the risks, and I went ahead and I accepted. If this is what's going to happen, this is what's going to happen, and it's some of them aren't necessarily just to make money. Some of it's, just to make content and to show you guys kind of how trading works and the things that you can do with it. Um, Again, like I'm still on my journey. Like I'm still learning as well. I'm not a guru. I'm not a trading goat. I have people that ask me, they're like, oh, like, would you get into this trade? Would you get into this asset? How's this crypto? How's this stock? Oh, da da da. And I'm like, I mean, I don't know, dude. You got to go ahead and you got to educate yourself on that asset. I'm not a financial advisor. I don't know how to trade everything. I There's definitely still learning curves. Like I don't trade crypto right now. And if I wanted to, I would have to sit there and I would have to watch crypto for, probably a couple weeks, couple months to get a really good understanding of how it works. Not to say that I can't just jump in and go crazy, I guess. But like if I was going to do that, I would trade derivative crypto uh, because trading derivatives, in my opinion, is a way that you can go ahead and get your money up a little quicker. Uh, Obviously, I'd love to own some Bitcoin or some Ethereum. That's in the plan for later. Um, but yeah, but like I said, like I have all these things planned out, and I'm gonna be doing the demo trading just for a little bit, probably a couple weeks. I'm also trying to get a little more focused in on making my course because I'm starting to make a trading course. It's going to be more teetered towards beginners. Um, so it's going to be, for people that are just getting started in trading and they don't necessarily know, how to read a candle or how to read the markets, what's market psychology, what's fundamental, what's technical, all that stuff. I'm also going to get into all the different markets as well. It's going to go over all of the separate markets, all of the intricacies for each market, how to trade it, not necessarily strategy stuff, but how to execute trades, how to do trading plans, how to calculate risk and reward, how to do position sizing, lot sizing, not lot sizing, that's specific for forex, but how to do position sizing, stuff like that. So there's going to be that course. I'm also going to do like a market psychology course, which is going to be specifically obviously like market psychology, so like what other people are thinking, what their biases are, how to go ahead and determine that type of stuff, and then also your self psychology, like how to go ahead and control your emotions, how to go ahead and you know figure out how you're feeling and what's going on, and how to go ahead and navigate that while you're trading, because that's a really important skill for trading. um, and yeah, I mean, after that, there's a lot more course stuff that I want to do, a lot more education stuff that I want to do, but those are like the three things that I'm working on right now. Um, and that's what I mean by like that's why I'm gonna go ahead and do the demo trading for a little bit because I'm figuring out this work schedule, and then once I can get like my day scheduled out like on a routine again, then I can go ahead and okay, let me go ahead and focus in. All right, here's my trading time, my work time, here's my creating course time, you know, stuff like that. So, yeah, I mean, that's what the game plan is. These lives that I'm doing, like these streaming sessions, I wanna keep doing. I'm not gonna be trying to like force any trades. I'll probably take a couple trades, but I do need to get like a few more things connected, and like I said, I need to get these trading strategies written out and formatted so that I can go ahead and look at them and execute them properly. Because obviously, I want to make sure that I'm practicing my good habits while I'm showing you guys that as well. I don't want to be hopping around on here and just clicking away and and doing everything wrong and showing you guys exactly what not to do. I'm gonna make a video exactly what not to do when trading. Um, but yeah, so I mean that's kind of the plan. It's a little busy, but I'm hoping or I'm working towards next month. It's April 23rd. So yeah, around sometime next month is when I should probably get back on my funding. Um, and then some of the stuff should be paid off and I'll be able to start kind of moving money around and start doing a lot of those other things. But yeah, I mean, really just focused in, like I said, on figuring out my routine. And right now I'm just trying to get work done whenever I can, for the trading hub, for the courses, for actually trading, um, and stuff like that. Like I went off on a tangent again, but these live videos, these live streams, I'm gonna try and do as consistently as I can. Definitely be able to do one tomorrow morning if I can get some sleep. Then I'll definitely be able to do one. for tomorrow, and we can check out the markets together, and then we'll see how the week continues, and when I can kind of get them in, I'll try and I'll make sure to post about them like on Instagram and stuff. But yeah, I mean, I think that's about it for now. And yeah, that was the after hours one. This one we went a little longer. I definitely had more energy. I got to take a nap, so I'm feeling a little better than I did this morning when I was completely dead, completely drained. But yeah, I will hop off now, and I hope you guys you enjoyed this video. I also want to keep doing these too, because I think like in the future these will be good like to look back at and be like, wow, like look how far we come, like look at where we were at. So yeah, so I think that's interesting. That's why I'm going to keep doing these too. But if you guys can learn a little bit and take my experience to kind of help you guys navigate your journey, then that's a plus too, and hopefully that helps. But all right, that's the stream, the after hours stream. Y'all have a good night. Oh, pretty late. All right, y'all have a good night.